Hello and welcome to this edition of Closing Trades right here on ET Now. Holding on to that 19,600 print, done with the policy, on expected lines, but higher for longer. That's the key message coming in from the central bank. So while we're clinging on to 19,600, we did see a good recovery post the policy, a bit of a dip down, and that dip also got bought into. It's really the Bajaj financial twins which are really holding the Nifty up. Finserv is now scaling higher, over 5% as we speak. Bajaj Finance higher by 3.6% right now. So these are the two, sort of heavyweights which are giving that leg up to the index. Bajaj Finance now at the highest point in the day after that 10,000 crore rupee fundraising that got announced just yesterday post-market hours. That said, couple of other stocks. The broader markets are once again mirroring the large players. So it's not like there's a dichotomy coming in there and, one is leading the other. So in that sense, both of them are in tandem. And it is the rate sensitives which are actually holding out. So banks, real estates, financials at large, they are the ones which are scaling up as we speak right now. So you've got a green tick coming in for most of the banking stocks as we speak right now. HDFC Bank, though, is lying absolutely flat as we speak. Nifty Realty, of course, is perked up quite nicely, a 2.25% uptick coming in there. Talk about some of the stock-specific action as well, and let's bring that up for you. There's Ujjivan Small Finance, and what a staggering Q2 update coming in, right? 43% of an uptick on the deposits. The advances have seen a uptick of about 27% on year-on-year basis, and that's something that's really gone down well with the street. That is one definitely big buzzer in trade as we speak right now. Bajaj Finance, of course, like we said, they've announced a capital raise of 10,000 crore rupees. The fundraise is obviously going to boost the BVPS by about almost 15% odd. Jefferies is maintaining a buy, target price of 88.30 on the share as we speak right now. 4% of an uptick coming in on that one. There's of course Nykaa as well, and they too came out with their quarterly update, and it's a double-digit growth that they are penciling in from say mid-20s thereabouts when it comes to their beauty and personal care segment, and they're pretty confident about the upcoming festive season as well, not just for beauty and personal care but for the retail or fashion category as well, and that's going to spell good news, they think. There's Kalyan Jewellers as well, revenue growth of about 32% on a year-on-year basis just from the India operations alone, and that stock is in a tizzy. 10.5 million shares traded at that, and a solid 9.5% move is what you're seeing from Kalyan Jewellers as we speak right now. But let's take stock of the markets from our chartist Kunal as well as Naresh on board with us as always. Kunal, hi afternoon. 0.5% uptake, steady after the policy, holding on to 19,650 in fact on the futures, in good shape.
Yeah, it started off to be a bit of a wobbly week, this shortened week. But then I think the end so far looks to be quite strong. We've managed to come back to that 50-day moving average. 19,600 is back again on the index. Now, the only I think the requirement which the markets would probably need is the large cap stocks like Reliance, HDFC Bank, ITC, ICICI Bank. I think if these four names start to get into even a moderate kind of a recovery from current levels, we could be looking at a possible stronger swing for the index going forward. So I think after this, after yesterday's price action, the retest of the 90,300 mark and the scale back above 50-day moving average for the Nifty today would maintain the long positions on the indices and would look out for higher targets on the upside.
Okay, it's really Bajaj twins all the way, right? Bajaj Finserv, Bajaj Finance, and Naresh, hi afternoon. I think a fresh record high on Bajaj Finance, if I'm not mistaken, a year-to-date high or so. 3.6% of an uptick on the futures. What do you foresee now on the charts?
So finally, the stock has broken out the 2021 highs, and that 8,000 mark was a major problem for the stock. It made tops in 2021. Again, the top in 2022 was closer to 7,700, 7,800. Then in June, July of this year also, the top was made around 8,000. 3 days back also, we made a top around 8,000. Finally, that has been crossed. So it's a multi-year high for the stock. And at the same time, on the bottom side, it made double bottoms around 5,500. So a major range breakout. So ideally, it should start a new trend, slowly and steadily keep going up. A short-term target price would be 8,400, which is where would expect in the short term. But overall, looks like a longer-term trend change for the stock.
Okay, that's Bajaj Finance and Trade for you. But Kunal, to the point that you were making about as to how Reliance, HDFC Bank, ITC, ICICI Bank all need to participate for the Nifty to see or at least make a attempt to claw back to that 20K mark. Do you see that happening?
So, as of now, the evidence is not there, that these stocks are absolutely stagnant. But then, in every market phase, we've seen some sort of participation coming back into these large cap stocks. Now, the question is that which of the stocks out of the 4-5 names would start to fire up? Because, for example, Kotak Bank, which was also an underperformer, that start to show signs of recovery. But HDFC Bank and ICICI Bank are struggling. So maybe these stocks can also play a catch up if the entire mojo for the bank Nifty makes a comeback. Reliance could be a bit odd one out because the stock is still not showing any great momentum as such. Yes, it's been holding on to that 2,300 mark. Even for ITC, more or less the stock is at a stagnant zone of 430, 440 levels. So, we need to look out for momentum into these names for the index to sustain this uptrend. Otherwise, we may go into that flip-flop trading session for the next couple of days in case if we see any of these 3-4 large cap names start to get into any kind of a selling pressure.
Okay. 19,600, not far away from the recent high, but frankly, the fact that we've supported key levels, both for Nifty and the Bank Nifty, it's quite admirable. The credit policy has come and no immediate reaction on the market. First a spike, then a dip, and now a recovery, so to speak. So it's not turning out to be a bad, session, so to speak, in terms of where the market is moving. Naresh, in this comeback trail, do you think banks will outperform?
So banks is the place where there is a case for an outperformance because it has underperformed on various time frames, whether it is the short term or whether it is the last 1, 2, 3 years. And that is where the case comes for a lot of these names could surprise. So watching out for more price action confirmation. So if you look at names like Axis Bank, closer to that previous all-time high of 1,000 rupees. You have IndusInd Bank, which is say not far away from the recent highs of 1450, 1470. You have SBI at 595, 600. The all-time highs are at 620, 630. So a lot of these names look interesting. At the same time, you have a HDFC and a Kotak Bank, which are at the lower end of the range and reversing even a mean reversion to recover 50% of the fall could imply a good fillip to the Bank Nifty. So overall, banks is the place where there could be leadership if there has to be a bounce.
Right. Just looking at some of the other names and the ones which are, of course, in news, we already flagged off Bajaj Finance and the kind of strength that it's seeing. But look at the move on a Kalyan Jewellers, for instance. Their Middle East, business saw consolidated revenue growth of 27%. India operations, a growth of 32% on a year-on-year basis. And that stock is really holding up very, very solid in trade. And of course, you've got the upcoming wedding as well as festive season as well ahead. Kunal, on the charts of Titan and Kalyan Jewellers?
So Titan has been a bit of a positive surprise as such because the last week or so the stock was actually showing some signs of a breakdown or major reversals on the indicators. But sudden price movements have a tendency to try and curtail these kind of price action for stocks very near term. So it manages to put a stop towards the immediate correction. The stock tends to consolidate at the lower level. So I think now 3,120, 3,150 mark for Titan could actually be a good support for the stock price. And I would probably expect that even if the stock consolidates or maybe corrects, it could retest those levels and could see a consistent bounce at that zone. Kalyan Jewellers on the other hand, I think the stock is nearing a bigger breakout. It's closer to that 255, 260 mark, which was the previous high. The stock had hit in the month of September. So I think after a phase of correction, the stock making a comeback is again a sign that the stock or the uptrend of the stock is intact. We could now be looking out for a higher target for Kalyan Jewellers in the range of 270 plus.
Okay, that's the take coming in on Kalyan Jewellers. But SBI, that's the other one which is in focus. And this time around, not any other trigger, but the fact that the SBI chairman, Dinesh Kumar Khara, has got an extension from the Reserve Bank for his tenure. In fact, this is a story that we first broke here right on ET Now. We chatted with him this morning, congratulating him not just on the extension, but also what he plans to do in this extended tenure.
It's like any other day, but yes, of course, I feel that more responsibility for ensuring the bank continues to grow well and do well in all its performing parameters.
Mr. Khara, once again, many congratulations from the ET Now family as well. And I'm sure with the extension, you've set some goals as well, right, in your mind. What's the vision ahead going forward?
Yeah, we were working. First of all, thank you very much for your congratulatory message. And of course, we have been working for some time now for leveraging analytics. Even we will go whole hog and see that how best we can leverage analytics for risk management, for sourcing of business, for offering the customers the next best product which they should get, and also bringing in operational efficiency overall in the bank. So that is something I would like to have this organization data-driven and even much more focused on some of the key parameters with the help of data.
Mr. Khara, so now for SBI, there is clarity in terms of leadership. But for Dinesh Khara, it's going to be Dinesh Khara 2.0. So how will the regime change for you from Dinesh Khara 1.0 to 2.0?
No, I think part of it would be the continuation. But yes, of course, we will try to do that better over now, whatever we have been doing. So that's how it is. But yes, of course, the focus is very clear that we have to be customer-centric. We have to ensure that our core parameters be very efficient, and also we have to manage the risk very well. So that is a very clear message for all members.
Sajal's one just now, let's connect with him to understand that what has gone wrong. Why are foreign institutional investors selling? Jonathan, I always thought you loved India.
Yeah, look, I think the problem isn't necessarily India. I think generally, obviously, we've had a period of exceptional volatility in the US bond markets in particular. And obviously the dollar has screamed higher, and that's never good for emerging market assets as a general rule. And clearly everybody's worrying about a global slowdown, recession, and people are just pulling out of emerging markets in general. And then obviously a market like India, which has been an exceptionally good performer versus the likes of China. Look, I guess there's a bit of profit to be taken there as well. So it's not really an India problem, it's the problem elsewhere, I would say.
So Jonathan, what has been your tone of activity when it comes to India of late, let's say 3 months?
Nothing. Very happy with, we tend to, our investments towards India tend to be much more longer term. We try not to be too short term. We have taken in other areas some equity weightings down to sort of underweight positions. But actually within the context of an overall equity allocation, we've kept weightings in emerging markets and places like India up. So actually, we've not taken money out of India at all, and we continue to like it on a medium to longer term basis.
But in the last month and a half, Jonathan, you must haven't added positions, is it?
Sorry, the first part of your question I couldn't quite hear.
No, I was wondering if you've added any positions to the
I
existing stocks in the India portfolio.
No, not yet. Again, the market obviously has shifted around a little bit. We don't have that many, if I'm honest, that many Indian stocks. So what we tend to be more longer term, larger cap type names. We haven't really played the sort of mid cap or smaller cap side. We just focus on a relatively small number of very liquid large cap names, which has served us quite well over time.
Just looking at the Tata Motors Group wholesale figures for the second quarter, that also has seen an uptick, as has JLR as well. You remember the report came in just last evening, and we've seen a steady performance from Tata Motors. 623 is where the stock is right now. Of course, 10% of the Tata Tech IPO reserve is going to be reserved for Tata Motors shareholders. So you are seeing a lot of frenzied buying for Tata Motors because of that trigger too. But Kunal, let's visit for the chart of Tata Motors, both in the short term as well as the long haul, say 1 year or so, is it still a good buy?
Yeah, it's a very good buy.
You've
I
not
think
sold your original position.
I didn't
Not
buy.
even a single share. Wow.
So
Not
I'm
even a
still-
single share.
No.
But it's in your trading portfolio also.
Yes, that's for the futures.
Yeah.
So I think even in the recent correction, the last 2-3 months, specifically the stock had come back to that 600 levels. I think if I'm not wrong, a couple of months back I had mentioned that closer to the 640 mark, that the stock should now get into a bit of a sideways range because the indicators were extremely overbought. Now, luckily, the stock in the last 3 months has not gone into a major correction. So it's not that the stock has gone to 550, 520 odd mark because from there the retracement would have taken a lot of time. Now, the good part is that the stock has gone through more of a time-wise correction for Tata Motors. This could probably indicate that the breakout could be much more sooner for the stock price. Now, that's where I would believe that 660 levels should be taken out for Tata Motors pretty soon. And my sense is, that the stock on the longer-term basis also looks very attractive. So, it's a matter of time frame as well as, holding power even from current levels. I would look out for much higher targets on the longer-term basis.
623 rupees for Tata Motors. What a year it's turning out to be for Tata Motors. What a year it's turning out to be for ITC. And Naresh, we have not spoken about ITC at all. It's been a while, right?
Yes, because the stock has also gone sideways. It made a classical top around that demerger news. The day the news got announced, we created a top at 480 to 500 band, and now we've gone sideways. It's testing the recent lows, but there is no follow-up selling as such. So it broke below the recent lows of 435, 440. But we did not see much selling. So this indicates that the stock is getting into a consolidation rather than a deeper correction. So it could be more time-wise than price-wise. So going forward, would expect 420 to 460 range to continue for quite some time.
Guess what their target price in Tata Motors is? 786. So that's indicative of quite of uptick even from the current levels. They're saying that JLR has reported both a sequential as well as an annual increase in the retail and wholesales volumes for the second quarter. They see a very strong order book and healthy growth for the retail demand, and that they are on track to meet the full year FCF estimate as well. That's JLR that I'm talking about. Tata Motors holding steady in trade. In fact, on that note, let me take it across to Sharad as well and get in all the chatter from the dealing rooms this Friday afternoon. Sharad?
Well, yes, in focus we're having C Infosystems. The brand is Map My India, and what we are hearing from the dealers is buying has been coming in from certain institutions, the domestic ones. And also do remember the volumes, that has also picked up almost 2 times its 20-day average. And importantly, the key DIs already invested in the company include Tata Mutual Fund with almost 1.5% stake. Now, looking at the stock price movement itself, from the September low, the stock has been on a roll, going up almost 30% and also currently rallying in the day's trade. Apart from strong volumes and price action, there are important commentary coming in, especially for the government business, and they have stated that the entire revenue contribution coming for the government business is expected to touch 20%, and the management in a recent interview to ET Now that stated that the government business is expected to grow 6 times over the next 5 years itself. And the buzz is in the industry that there might be some more orders coming in, especially on the satellite front itself, which will be coming from the government, which will actually benefit the company, especially on the smartphone maps front.
Map My India. Jonathan, within the new tech companies in India, whether it is Map My India or InfoEdge, InfoEdge is not new, but RateGain, there are a couple of drone companies which have gone public. Do you have something on your radar which you would find attractive, which you would like to buy? Maybe it's not now, but on a decline.
Yeah, look, if honest, as I said a moment ago, the newest stuff we probably need to do a little bit more work on. We've tended to focus just on large cap, more your usual type of Nifty 50 type stocks. The new stuff we haven't, we don't sort of tend to go down to that sort of level currently. So no, I'm afraid I don't have an opinion on that one.
Jonathan, what is your opinion on HDFC Bank? They have surprised everybody with quarter-on-quarter growth. Yet it's not a merger phenomenon. It's almost a 3-year phenomenon that HDFC Bank and Kotak Bank, they've been stuck in a range. Now it's getting painful if you own these stocks. While last decade, if you owned these stocks, it was a rewarding experience. Now it's a painful experience.
Yeah, I totally agree with you. I think it's interesting. The views on the street seem to be generally still very positive. It's a name that we do have and do very much like. But at the moment, as you rightly say, it's been underperforming. It's difficult to pin the reason. Is it just indigestion from the merger still carrying on? Or, I guess maybe the street wants to see a bit more evidence of how the merged entity is actually performing before it gets a bit more conviction on the name. But absolutely, it's been a phenomenal performing bank up to this last period. And we still think the metrics look very attractive. And, it's a name we're happy to hold.
Right. Okay. That's the take coming in on Kotak as well as HDFC Bank and where those stocks are headed right now. On that note, let's take in some closing trades as well. Naresh, what do you have on your list?
So that would be GAIL India. The stock has been showing a lot of relative strength, bouncing back from that 118.20 breakout levels. Could eventually break out above all-time highs and go higher. So looks promising here.
Kunal, what about you?
So I'll go for a contra buy on SBI Cards. The stock has already seen a sharp correction from 925 to sub 800 levels where it's trading. So would look out for a decent bounce at current levels.
Okay, on that note, let's take a very quick break. We're holding steady. Seems like this volatile week is definitely going to close in at least with some green. We'll track the market's last lap on the other side.
In conversation with our technical experts and Jonathan Sichel. Jonathan, it is historically a very obvious view that foreign institutional investors, they love to own Indian IT companies. They generate a lot of cash, the return ratios are smart, they keep on doing buybacks. Do you think that downturn in the IT space right now is more like a cyclical downturn?
Yeah, I think if you look at the Indian IT companies and compare them to global peers, performance is pretty similar actually. Sometimes Indian companies outperform, but look, we remain quite positive, obviously on the medium to longer term view with these companies. There's good structural growth we think that is available to these companies, and they have obviously one advantage I think over some global peers in their access to their access to graduates and trained engineers, which is easier to access in India than I think some other countries. So we're still very positive on the names. We think there's still good growth available going forward, but sure, these stocks and sectors do from time to time go in favor, out of favor, but ultimately we think that there's still good structural growth that's available for these stocks.
47 rupees for 4% higher. On your screen, there is Tech Mahindra, which is 220 rupees. DLF fund is, it's just been such a comeback stock. If DLF is doing well, the real estate index does well. If the real estate index does well, then you will see allied companies, the tube companies, the pipe companies, the entire space in terms of where the tiling companies are moving, that entire space will do rather well. Jonathan, there are a lot of popular themes in India, at least at the HNI level. Defense, railways, power, manufacturing. Which one do you like and why?
I think, clearly it's finding the appropriate companies that feed into the sectors that you're looking for, the themes that you're looking for as such. For example, we've loved the whole defense story for quite some time, but finding we have a preference for private sector companies where possible, and finding relevant companies that play into the area looking for is quite difficult sometimes, not just in India. It's a global issue in many respects. Obviously you just have to look at the L&T chart, and it's been a phenomenal performer because it plays into a lot of the sort of themes you've just highlighted. We sold L&T a month or two back, obviously thinking that the stock had, that the valuations were looking a little bit on the stretch side, but the stock has continued to move higher because, quite frankly, it's one of the few large cap names you can buy that feeds into many of the areas you just mentioned, including obviously they have a small and growing defense business as well. So yeah, they're interesting areas, but clearly it's finding the names that play into it in a meaningful way, which is probably more of the issue.
Jonathan, great to chat with you. Thanks as always for taking the time out. Let me also welcome on board Rajat Sharma. But before that, hear out what Vijay Kedia from Kedia Securities has to say about his recent investments, his view on infrastructure as well.
When we are talking about small and mid cap, that means we are talking about 5,000 stocks. So you cannot rule all the 5,000 stocks with one stick. You cannot categorize in just one word that they are Humpty Dumpty or they are crazy valuation. It depends. In some of the pockets, in the many of the pockets, there must be crazy valuations are there in those stocks. But then again, it depends that which side of fence we are standing or waiting. So far, my stocks are concerned. I don't think that they are, they have some crazy valuation or something like that. Of course, they are overvalued, but that will be adjusted with the expectation, with the numbers which are going to come maybe after 6 months or 1 year. So all these things, your stock market is not like a pakka scale, that 50 gram this side, 50 gram this side. Sometimes it is like up, sometimes it is down. Sometimes valuations are crazy, sometimes they are undervalued. There is no one metric, so it keeps on happening. So that is a part and parcel of the game.
The fact that historically you avoided companies which have a huge debt in them, you avoided companies which are dependent on government business, you avoided companies which have a cyclical business, but this time you're thinking differently. Your investments right now, if I look at the public domain, they are in infra. They are in companies which in a sense are a play on cycle rather than secular growth. So are you changing your style?
No, I don't think that I am changing my style. So far infra is concerned, as you mentioned, so like I've invested in a company, two infra companies. One is debt-free company.
Okay.
And
which is the debt-free company?
The Om Infra, I recently invested, and it's not a recommendation.
Yeah, of course. We are discussing the stock.
So it's a debt-free company. Very minor debt, maybe short-term debts are
That's
there.
working capital.
Working capital debt. And another which I invested a little a while back, that was Patel Engineering. It was having some debt in its books, but now reducing their debt. At one point of time, they had a debt of around 5,000 crore or something. Now it is somewhere around 1,700 crore, 1,800 crore. So that's in infrastructure companies, because their time period, like to execute an order, it takes a long time. So for that they need to give some bank guarantee. They need to put investment before the money is realized. So that debt will always be there in these companies. But one has to see that whether the company is comfortable with that kind of debt, that can service the debt or not. That is important. So in my view, it's a sunrise industry, and they can serve their debt. So I'm comfortable.
So let's look at a case study here. A case study of a stock where you invested a couple of years ago, Webhub Global. Between 2015 and 2021 or 22, the company went through an exponential curve. They expanded, they got the business right, they converted themselves to a platform company in peak of COVID, and the return ratios were enviable. Now the slowdown has hit them. Last 4-5 quarters, they've disappointed the market. But you've still not sold. Your core holding in Webhub is still intact. So even though the company has gone through a downturn, you had the patience to keep on to the stock. So when the company is going through a downturn, what prompted you not to sell the stock?
So I will say your memory is very sharp. I appreciate that. And just for your viewers, that I had bought Webhub Global at an average price of say 50 rupees.
Okay.
Now it is split and whatever it is.
Okay.
And in 50 rupees, in 2021 or 22, it was 1,000 rupees.
Okay.
From 50 to 1,000 rupees in a span of 6-7
7
years.
Right.
Okay. So I did not sell. And then again it fell back to 300 rupees. Now again it is 450 rupees. So this is the story. Why didn't I sell? Just because I found that story is not yet over. On the contrary, of course the growth has come down. Earlier company was growing at 20%. Now company has plateaued or not grown in last 1 year. Now or maybe in the current year they will grow some 7-8%. During that time also balance sheet was very perfect, and company expanded also. They entered into some new geography, like they entered into Germany and all. So that means company is generating enough cash flow to expand its business or to diversify into a new territory. So that shows the confidence of the management, or confidence of the balance sheet. See, in spite of growth, maybe the train has slowed down. Train has not stopped. The train has slowed down. So that is part and parcel. It's okay. Now when this new phase will start, then again earlier they had 2 geography. Now they are into 3 geography. So whenever that new this era will start, So they should be, they should have good opportunity in front of them.
We had a chat on the same forum, a different year, and you said Sensex 1 lakh hoga. Today 60,000. तो Nifty 25,000 कब होगा?
25,000
25,000 तो हो जाएगा.
अभी तो क्या
50,000.
60,000 जो अभी सेंस है. Ultimately
That's a better way of looking at it. हाँ. तो वो when do you think it will happen?
या निफ्टी सेंसेक्स को फॉलो करता है.
Okay.
तो वो अल्टीमेटली होने वाला है. तो सेंसेक्स अगर 1 लाख की अगर बात करते हो तो मेरे को लगता है सेंसेक्स 1 लाख क्या 4-5 साल में हो जाना चाहिए.
4-5 years.
हाँ.
13-14% earnings growth, little bit of P expansion.
Yeah.
Rule of 70 to actually less than 5 years.
हाँ तो बस उसमें हो जाना चाहिए.
But so Nifty is at 20,000. Will you be surprised that in next 10 years we could be closer to 1 lakh on the Nifty?
In 10 years 20,000 1 लाख.
Yeah.
ये तो थोड़ा ज्यादा लगता है मालूम
ज्यादा
नहीं.
लगता
हाँ,
है. 50,000 हो सकता है.
50,000 तो हो सकता है. 10 साल में आप बोल रहे 50,000 2.5 गुना ही हुआ ना. वो तो हो सकता है. That's a possibility.
All right. Now, whether the Sensex will touch 1 lakh or 90,000, nobody knows. But directionally, I think it's headed higher. But but the event which will keep us all glued on Sunday afternoon is going to be India's first World Cup match against Australia. What are the odds? What we should expect? That's footage and pictures coming from of Indian cricket team. They've arrived in Chennai. You can see Virat Kohli. You can see Hardik Pandya. So that's the footage and that's pictures that Indian cricket team has arrived in Chennai for the opening match. Bashad's got more nuances, more details in terms of the expectations and in terms of little bit of averages of historical matches.
The expectations for the India-Australia match is very high, and India will be having its opening match coming in, and the date is 8th October. The venue will be Chennai. From 2 p.m. onwards, the 50-over match will start for the World Cup, and the excitement is at its peak levels. But there are certain factors which you would be actually watching out for just going ahead, and the first one being, of course, Shubman Gill getting a dengue. So that will be something, his selection would be something which will be a question mark. And also most spinners likely expected to be there on a black soil pitch. Now, why a black soil pitch? That pitch turns. That is why, be it investment, be it matches, we should be always prepared for the turns. And also Australians, they have acclimatized just before the World Cup. There's a pre-World Cup series which was played, and because of that, they have acclimatized as well. Now, apart from the factors, let's look at the facts. Now, two interesting matches were there. In the year 2003, the final, India did lose out, and that was a massive loss, but that loss was avenged. 2011 semi-final, India outscored Australia and then went on to win the Cricket World Cup as well. So you can see India versus Australia on a head-to-head basis if you look at the data. For the 50-over World Cup match, wins just 4 for India, but Australia is on the other hand having 8 wins. But do remember, in the last World Cup encounter, India did win in the highest scores, both the teams going above the 350 mark, while the low scores coming below the 130.
That's something that's going to keep our weekends busy for sure, and Sunday for sure as well. But Sharad, thanks for that excellent analysis. Let's hope Team India has a glorious start in this World Cup. Rajat Sharma joins in on the show right now. Rajat, more than the market, I think it's the Sunday match that everyone's going to be looking out for. Have you booked any of the tickets for the World Cup this time?
No, Aisha, no, I have not. And I think the Sunday match, to be honest, these two teams particularly are the only two teams in, participating in the World Cup which have been playing with each other. I think this is going to be their 4th match in the last 1 month, because the Australian team has been in India. They've been playing a lot. They're very used to each other. And, it's just a continuation of the series that ended. So for the players, it will be no different than that. It'll be an interesting match because, World Cup match, the pressure is at a different level. So will be interesting to watch, but no, not Chennai. But, I'll tell you what, when India is playing Pakistan, I think on the 14th, that time I am in Bombay, in Mumbai. So planning to watch that one with some friends at some restaurant in Mumbai.
Okay, markets 112 points up for the Nifty. If we're hugging on to that line in terms of where the direction has moved. So Rajat, what's been keeping you busy in terms of portfolio allocation? How have you changed? What have you allocated? What have you subtracted in the last 3 months?
No, Nikunj, so the thing is, I've not done things very differently. It's the same stocks that we're holding and buying more of, which I've spoken to you about, many times. The same ITC, Mphasis, Coal India, ONGC, Lupin. We've just added 2 more stocks. In fact, added 1 more and initiated coverage on the other one. One is Bandhan Bank, because I was going through their financials, and it's a very unique bank because most other banking stocks, banking sector in general, you'll see credit offtake is usually very high compared to their deposits growth. So this is one bank where deposits are growing really rapidly, and their credit offtake, what they're lending is not growing as fast. And I think the reason is they probably wanted to maintain too much cash on their books, because the company has done a lot. In the last 2 years, they first acquired like home lending business, Blue Finance, but then they got into AMC business. They acquired IDFC's mutual fund business, which is now Bandhan Mutual Fund. So now I think going forward, I won't be surprised if you see quarter on quarter their net interest margins jumping sharply, because they've got enough money to give out, enough credit offtake which they can do with the raw material they have on their books. And valuation wise, it's amazingly cheap compared to most of the other banking stocks. It's right now available at a price earnings multiple of 19. And most of the businesses they've added, they'll also start generating revenue. So that's one stock which I'm having in my portfolio. All client portfolios, everywhere we have portfolios, you'll see we've added Bandhan Bank. The other stock that I'm looking at is Panacea Biotech. Very, very interesting company. I think in before COVID days, they had a lot of debt on their books. Around COVID, they restructured the company. They've paid off all their debt. It's a debt-free company. They got out of low production markets like India and Nepal, which is where they did their whole polio immunization. And now they're focusing more on developing nations in Africa. They got patented their polio vaccination in 30 countries. Their big clients are Government of India, UNICEF, and Pan American Health Organization. Their order book stands at 1,040 crores. That's one stock that I really like. And these are the only 2 stocks that I'm looking at. But broadly, to answer your question, Nikunj, I meet clients and they're very eager to add stocks into their portfolios, because stock markets have done phenomenally well. What I tell them is that, keep maintaining a balance between the money you have in your fixed income products, in your banks, and what you're investing in stocks. To the extent you have incremental money coming, have a allocation mix and keep dividing it equally. So, not done very much differently the last few months.
TCS is flying. 1% for TCS is 36 rupees. That's actually not bad. But what is flying today is actually Bajaj Finance. It's a new high. Nuresh, I think it's a new high for Bajaj Finance.
Yeah, a new all-time high for Bajaj Finance. And finally above that 8,000 mark after 5 attempts over the last 2 years. So seems like a fresh start of a trend. And in the last few times, every time it went to 8,000, took a sharper dip, went to say almost 5,300. The next time it was 5,500. Recently it made a dip towards 6,800. So going forward, I would expect a move towards 8,400, 8,600 in the short term.
Rajat, Bajaj Finance is exactly moving like what HDFC Bank, let's say, did in last decade. The sector was not doing well. There was a problem in the steel sector, power sector, metal sector, and yet HDFC Bank was able to maintain its growth and its NPA trajectory. Bajaj Finance is growing at a time when retail credit is not growing, when other NBFCs are struggling, and they're growing at a rate which is enviable, 30% plus.
Yeah, I know, and I think it's a mystery to me how they've managed to grow. And anytime a company decides to do fundraising and do a QIP or sell more shares or whatever, typically you'll see the fact that so much more shares will come in the market is actually a negative news initially for the stock, and the stock falls. But the fact that they're raising so much money, their stock is actually doing well. But to be honest, around 2 years or 3 years back, I don't remember exactly what time it was, I said, I don't like this stock. And this was immediately after they converted a lot of their loan book into flexi loans. So then, the NPA regulation does not apply to those flexi loans because, the categorization changed. I said, no, I don't like this stock because of the accounting policy that they've done this. But, it has surprised me as well. The stock continues to move higher. You're right. Having said that, sometimes it happens you don't track certain stocks for whatever reason. You sort of ignore, you don't like them. So you just ignore, you don't like them. And there's many other stocks to, buy, hold, make money in. I don't know if it was a mistake on my part to not realize, but again, since 2-3 years, I don't think the stock has gone anywhere. I think if you see the last 2-year performance, or 3-year performance, even now, with all the fan following that this stock has, it's actually remained, I don't know, if you check the price chart for the last 2 years, I think it would be pretty flattish. I think, I'm not sure if it's moved higher. But recently it's gone from 7,000, 7,900 now. So yeah, I think since the time I said that, it's not done anything significant.
Okay, that's the take coming in on Bajaj Finance as we speak right now. But Rajat, soon we're going to kickstart earnings as well, right? Just next week, you've got all the IT majors come out with their numbers. Tell me, what can we expect? Because it seems that the numbers and the commentary is still going to be weak. But do you think now, if at all, the stocks do plunge after the numbers, that may be a good time to start nibbling in?
No, absolutely. I think it's already right now. It's a great time. One of the stocks, when I was talking to Nikunj, I said it's the same stocks. I said Mphasis is something I'm buying more of. It's really interesting that, these stocks sometimes based on future guidance, they're falling and then, they revive when the numbers start looking good. But if you look at their numbers, if you look at their income statements, Mphasis has always been growing at that 20% mark in terms of the total revenue. It was 80,000 crore in 2019, then 90,000 crore next year, 100,000 crore. Today it's 146,000 crore for financial year 23. And the growth has always been the same. So the stock keeps going up and down based on, overall valuations, but the growth in the revenue has always maintained irrespective of what the stock price is doing. And I think right now also you see a company like Mphasis, an IT company. I was listening to a comparison between IT companies in India and abroad some time back. One of your guests, it's unique. Which IT company gives a dividend of 2.5% at this price? At 1,400 plus rupees, and Mphasis' dividend yield 2.5. What I'm holding in my portfolio, my dividend yield for Mphasis is about 3.69. And every time the stock falls, I think you should buy a little more of it. And every time it goes up, you should continue to hold because, there's no reason to sell these stocks. The growth is intact. The stories are intact. So we look at the earnings, but I'm not too much driven by that so long as they keep maintaining their, growth in revenue and profitability.
That time on the show, when we get you some BTST trades as well. Kunal, what's on your list as we wind down the week?
So 2 buy calls and focusing on mid-cap names. NBCC is the first stock which is trying to get into a consolidation, but then I think it's also forming a bullish pennant formation on the daily chart. So it could be ready for a breakout pretty soon. Would suggest a buy with a target of 66, stop loss at 58. And L&T Finance is the other stock. Excellent breakout today for the stock, about 135 mark. Would look out for targets at least in the range of 150 plus. Stop loss to be kept at 133.
Right. Now, what's on your BTST list?
So first is a buy on GAIL India. The stock has reversed well. Stop loss at 123, target price of 130. Second is a buy on IndusInd Bank, reversing back again from the 1380, 1400 mark. Could eventually break out above 1470s. For now, a target price of 1470, stop loss at 1420.
Let's just, on that note, also mark out what are the cues for next week. And, next week, Nikunj, officially we're going to start off the earnings season across the globe, right? And for us, it's going to be on 11th TCS, then you'll have Mphasis, you'll have HCL Technologies, whole host of mid-caps, Delta Corp, Zaggle, Sami Hotels, Angel One, HDFC AMC, Tata Metallics, Sterling and Wilson, a lot of these companies coming out with their numbers. And I think that's where the market will find its Q4, right? From.
So there are 2 things which are important. One, the absolute positioning ahead of earnings season and positioning of IT, which is the first leg. Yeah. The positioning of IT in the month of April was that nothing will ever go right for them. The positioning for rest of the market is that nothing will ever go wrong here. Unlike April, the positioning of the market was that something will go right and something will go wrong for the broader market, but for IT, nothing will go right. IT companies never came out with excellent numbers for the month of April, yet the stocks have come back. You could talk about the rally in NASDAQ, you can talk about valuations or a simple reversal which happened when money moved out of banks to IT. Right now, that's not the positioning. While markets are not charged up and super bullish about IT, TCS I think is at a 52-week high?
Yes, it made a 52 just now.
Imagine. Ahead of numbers where nobody is expecting anything, TCS is at a 52-week high. Mphasis is not far away from an high. HCL Tech has almost a 20% swing from the recent flow.
Correct.
So it is not that markets are not expecting anything from IT. They are expecting, because the deals what they've reported, for especially TCS and Mphasis, that there would be renewed optimism and that there would be decent commentary. If anything is missing, then IT stocks automatically will fall into this downward spiral. That's one. Broader market, the expectations this time around are very varied because earnings season is in October but Diwali is in November. Same time last year, earnings season and the Diwali and the Dussehra coincided in October. So that interplay would be there. Banks is interesting. Everybody likes banks, everybody owns banks, but banks are not moving higher. If bank numbers are strong, then are we in for a reversal of money moving from IT to banks? See, which are the sectors where you get surprises from? IT, banks and metals. Consumer, you don't get surprise. These, you never get a surprise from autos. You never get a surprise largely from...
All of it is known any which way.
Yeah, so these are three sectors you'll get surprise from. Metals, too thin, they will come in the last leg. IT is the first leg, banks are somewhere in the middle. Banks, if they surprise you, which they will in terms of upside is what I expect, will that be reflected in price action?
And even for banks, much of the news is already digested because of the Q2 updates. We've already seen a price action move, even with a Bajaj Finance, for instance, or HDFC Bank, or the smaller ones, which have had some excellent growth numbers, even PSBs and private lot.
So nothing is cheap, to be very frank. Now the tricky part is railways and defense. Markets have taken these stocks higher exponentially. It's been a parabolic move in some of these stocks. Now these are the businesses where you will not see parabolic earnings recovery or parabolic earnings in the current quarter. So for those who are hand-on-heart investors and traders who bought into them, are we in for a result disappointment? Because, let's say if you are in HL, if you're making an aircraft, it will take 10 years to make an aircraft. If you're Kochi shipyard, it will take 5, 7, 10 years to make a ship. And markets have taken these stocks higher as if the ship is going to be made in the next 6 months and delivered in the next quarter. So that's where I think the numbers are going to be good, but not great. So will the momentum be justified in defense, railways? The surprise sector, if you frankly ask me, merchant power. I think that's where prices have really gone higher. So that's where I think the surprise could come in from. Some companies where margin pressures here and there, so you could be in for some surprise from consumers. But barring that, it's earnings season where the temperament of the market actually would be tested. I don't think it's a trajectory which will be questioned.
Yeah, that's going to be the case. Rajat, where is it that you're anticipating big positives or negatives from the earnings?
I think FMCG is one sector where you'll probably see earnings improving a lot, not just for this quarter, but this quarter after that, post Diwali, because sales really increased during that time. And one of my favorite stocks in that basket, again, I've spoken about it many times over the last 2-3 years, is ITC. And even right now, I think for the second quarter, their revenue was up from, this is operating revenue overall, was up from 14,000 crore to about 18,000 crore if you compare it to the previous year. So, it's firing all cylinders. It's revenues across all segments, cigarettes, FMCG, hotels, everywhere is just going up by 20-25% each year. So I think I'd be looking out for results on IT and a lot of the other FMCG stocks. The other stock that we have is United Spirits. I'd be, keeping a close eye on what happens there. So I think FMCG is one sector. Banking, I don't think will do much from here because most of the things that had to happen have already happened in terms of increase in interest rates, which RBI has done 250 basis points the last 2 years. I was listening to the governor's commentary post the policy today. And, they said that we're going to have ample liquidity. We'll maintain that, but nothing big is going to happen there anytime. And I think it's going to be a pause there for banking. So, to answer short, FMCG is one sector where I think earnings will surprise in a positive way.
Okay, Rajat, great to have you on the show. We'll let you go on that note. Naresh, let's get a Nifty strategy as well from you for the week ahead.
So as of now, it's a hold on the Nifty. would be looking at, say, a further momentum about 19,750 to buy. So if somebody is trying to preempt, one could buy some and be ready to add on dips going forward.
Kunal, it's almost been a 1,000-odd point range that we've seen on the Nifty Bank alone. Tricky to call, but where do you think it's headed?
Yeah, tricky to call because, even at current levels, the larger cap ones are not firing.
Yeah.
So, that's the only problem. So we are getting into that zone where I think a couple of years back, ITC was when the stock was at 180 or 200 levels and the stock was not moving at all. I think we are getting into that zone for frustration of such for the likes of HDFC Bank, maybe Kotak Bank added to that list from the banking pack. So maybe it could be a point where these stocks may turn out to be good value buys at current levels, but purely from a technical sense, we look out for momentum, and that's clearly missing out for most of the larger cap private sector banking names.
Okay, let's begin winding up for the day and the week then. Done with the policy, now gearing up for the earnings season ahead. Kunal, Naresh as well as Rajat, we let all of you go on that note. 19,677 is where we're shutting shop for the futures. A good 100-point uptake for the Nifty coming in. The Bank Nifty not firing as all guns blazing as did the Nifty. A lot more tempered of a move coming in. But the breadth of the market is held out quite nicely. You managed to close in well in favor of the advances. So today, you had the broader market participate with equal fervor as the large caps. Bajaj Finance, Bajaj Finserv all the way. Bajaj Finserv, in fact, is closing in with a 6% gain. It's been a near 4% gain coming in for Bajaj Finance as well. HDFC Life, Adani Ports, Adani Enterprises, DRL, Divi's Labs, these have been some of your other significant movers. In fact, there's been TCS also, which is held out ahead of its numbers on 11th next week. That too has managed to eke out a gain of about almost 1% or so, but underperformance from HDFC Bank. I mean, to think of it, that kick-started the market rebound journey. Today, it hasn't participated. But on that note, we're going to wind it up right here on this edition of Closing Trades. Thanks for watching.